Hey guys, thought I'd do a bit of a deep dive into Argo Blockchain, just sort of get some thoughts down. Probably be a little bit of a garbled video, but yeah, let's have a look. So currently at £450 million market cap. So I just thought I would sort of have a look and see where we are on profit and what's hopefully to come once the Texas facility is built. So, having a look at their Q3 results. This is 3 months ended September 2021. We're looking at sort of revenues of 20 million, just about, from 597 Bitcoin mined. This figure is sort of coming down a little bit month per month. They're not quite doing 200 Bitcoin per month because the hash rate is going up overall, so the difficulty is going up. So sort of in the 3 months to September, the difficulty was sort of averaging about 16 and a half, rising up to sort of 19. So they were doing 200 per month, and then the this quarter is sort of averaging 21 and a half. So yeah, they're going to get less Bitcoin per month, but then on the flip side, the price was sort of averaging $40,000, maybe a bit less, and sort of this quarter, you're looking at sort of average of 50,000 ish. So yeah, you get slightly less Bitcoin, but you get it at a higher price. So it does kind of work itself out near enough. So I would think the revenue may not change that much as long as while they're keeping their hash rate the same. So I believe the hash rate in these 3 months was 1.6 exahash. So we'll have a look at the hash rates in a bit, and then direct costs, depreciation, everything. I would be looking to exclude this change in the value of digital currencies. So as far as I can see, this is sort of how much the HODL goes up and down in value. So it sort of obviously had a good quarter this quarter, or in the 3 months leading up to September. But if you look at the 9 months, then it's less. So you're sort of counting a load of profit in this quarter, but much less for the 9 months. So I would just exclude all that. It's not profit; it's how much the balance sheet is moving. So then you've got consultancy fees, professional fees, general, all that sort of thing, share-based payment. Not sure whether I guess this wouldn't linearly increase. This is sort of obviously Peter taking his payment in shares, and they had a loss on the sale of an investment. But then you've got interest expense at 200 million, or sorry, 200,000. But this will be going up a fair bit. Looking at the last balance sheet we've got is sort of the half-year results, and they were at what we got. So loans and borrowings, £15 million. No. 4 million in long-term liabilities, or long-term loans and borrowings rather. And they've also taken on, I believe, £30 million in additional debt. So that would take us up to 50 million. So yeah, you could knock off this loss on the sale of an investment, but I would just combine those two and say it's all going to be interest on the loans. So that'd be a little bit cautious then. And then income tax, which would sort of increase linearly with the increase in hash rate. So I'd sort of think and calculate these figures out, and then use Sven Carlin's sort of little, fairly simple discounted cash flow model. So my sort of little calculation would be the operating profit of 19.183 million less the change in the fair value of digital currencies, because I don't want to include that, less the realised gain on the sale of digital currencies, and that sort of give you 10.098 million, less the loss on the sale of an investment, less the interest expense. So that would be sort of the my profit before tax, excluding the change in the value of fair currencies and other bits, and then sort of looks like income tax and other taxes, they're paying about 30%. So these aren't going to be sort of 100% figures, but gives you an idea certainly. So 6.4 million-ish per quarter, if they were to sort of carry on that indefinitely. So if we times that by 4, so 25.6 million profit after tax for the year, as sort of an ongoing, as I say, not including how much the hodl goes up and down and that sort of thing. So if we go to the discounted cash flow model, so this is a sort of, well, 9-year, I think it was 10 years before, but we just haven't put in sort of extending it by 1 year. Put in a sort of fairly conservative 15% growth rate for the next 5 years. Expect it would probably be more than that, but we'll see. And 10%. So this is average growth of 15%. So it would likely be higher the first couple of years, and then it would sort of trail off, and then sort of 10% the following 5 to 10 years. 10% discount rate. So to say you're looking to make 10% per year on the stock, and a final PE at the end of 2030 of 20. So sort of a fair multiple for a company if they are growing roughly this size. And then so if we put in 25.6 million in profit after tax, then you get 581 million market cap. So with them being currently at 449 on today's hash rate, would suggest they are a little bit undervalued. But then obviously we've got, just looking at quite an interesting fella on Twitter. I've mentioned him before, I think, Anthony Power. He is sort of looking at the most recent hash rate, which combined with their sort of small Zcash amount that they put to mining, currently looking at sort of 1.72 exahash, and they're expecting sort of once Texas gets finished, hopefully the end of June, we're looking at 3.81 exahash. So, and that would include, I guess, maybe some more Zcash mining, but if we take it all as an equivalent, going from 1.72 to 3.81. So obviously the question is, are they going to take on more debt or dilute some more to get there? They seem to be sort of building Texas on a bit of a hand-to-mouth basis, sort of doing whatever they need to do at the time to pay the bills, rather than sort of just do one huge, great big load of debt and and pay for it that way. They're sort of hoping that Bitcoin was going to perform a little bit better than it has done. Maybe they would have sold a little bit more of the hodl. But yeah, I'm quite happy for them to do that. I would expect a good first quarter next year, so maybe they'll sell a little bit of it. But yeah, 2,317 as a current Bitcoin hodl, so that's about £88 million at today's prices. So yes, so if we're looking to get to 3.81 exahash, so that's my current sort of profit figure that I would be looking at on an ongoing basis. So if we divide that by 1.72 combined exahash and times by 3.81, this would be an in theory profit after Texas is complete on an annual basis. So from next July until the following July. Not 2022 as a calendar year, but the sort of annual figure once Texas is complete. So again, if you put this into the intrinsic value calculator, 56.7 million profit after tax, then yes, you're looking at £1.287 billion. So you're looking at sort of a good 2.5 times current market cap. So I think there is room certainly to either take on a little bit more debt if they want to get to this, or sort of dilute a bit more. Obviously that would increase the market cap without increasing the share price, so you wouldn't gain anything on that. But yeah, to sort of think of them as a $1.287 billion pound company in 6 months, then yeah, seems like there's a fair bit of upside. So if they sort of dilute us and we get to 600 million from 450 million with no increase in the share price, then you could still be looking at a double once Texas gets built. So I just think people aren't sort of taking the future numbers into account, or sort of doing any real profit calculations. So that's my take on where the profit would be. I don't just take this sort of profit figure because that relies on obviously the hodl going up indefinitely, which it wouldn't necessarily. That is all. These figures are all based on roughly today's Bitcoin price and today's difficulty. Would expect difficulty to continue sort of trickling up as more miners are increasing their capacity as well. But if we see a fair move in the Bitcoin price upwards next year, then that should hopefully, I would think, cancel that out and then some. So you should get a sort of real terms increase in Bitcoin price, if you like, taking into account the difficulty. So yeah, just looking at he does some relative comparisons against Hive, which I do own, and then Bitfarms and the sort of two big boys, Marathon and Riot. So they've obviously got much bigger capacity, but yeah, I thought this was quite interesting. So the market cap divided by their current hash rate is sort of fairly low for Argo, but then, or fairly low compared to these others. I think these others are sort of benefiting from being solely listed in the US, but they're also looking forward to their future hash rate. So the market cap divided by their future hash rate, which Argo we're looking at 3.81 exahash. He does it in dollars, so $171 million, sort of per exahash, if you like, which either a bit more than that. Bit farms are a bit less. I know he's a big fan of bit farms. Marathon sort of are a little bit less than Argo, but yeah, 23 exahash they're looking at. I would think, there could be issues in getting to that from 3.2. So not sure I'd take this 167 with too much validity. And then Riot sort of 347. So that's about sort of double what Argo's is. So sort of showing Argo are kind of the cheap one at the moment. Yeah. So that's my thoughts really on where we are. £450 million market cap, and as I say, with a sort of potential future in July of next year of conservatively 1.2 billion pounds. So as I say, if they have to take on a bit more debt or sort of dilute us up to say £600 million without the share price increasing, then yeah, you could still be looking at sort of double from where we are now, based on a fairly sort of conservative discounted cash flow. So yeah, leave your thoughts in comments below. As I say, a little bit of a garbled video, but I just thought I'd get some thoughts down and do a bit of napkin maths on where we're going to be after Texas is built. So yeah, leave a like and subscribe if you want to see more. See you soon.